Hey traders, welcome back to the FXE YouTube channel. Last week we got the continuation I was expecting, but then after that we had a lot of awful price action. And the weird thing is we actually had some news events that really shot the price up, and I was expecting continuation, but instead price came right back down. So all in all, really sloppy price action last week. Today I'll do a top-down analysis, do a market review, and then give some ideas for Monday. But first, hit the thumbs up button and subscribe if you haven't already. Now let's get into it. Okay, let's start with the fundamentals first. So just to start, for me, the fundamentals are still in favor of a weaker dollar. Whether that happens or not, that's a different story. We'll just have to wait and see. But if we look at the news for next week, we start the week with consumer confidence on Tuesday during the AM session, and then on Wednesday during the AM session we have preliminary GDP, and then on Thursday during the AM session we have PCE and unemployment claims. So PCE again is an inflation indicator, so this could potentially move the markets, especially coupled with unemployment claims. If both of those are in favor of a weak dollar, then we may see the majors start flying to the upside. And then on Friday, we have manufacturing PMI as well as Powell speaking. Now, if we move over to the yields next, so what you can see on the yields is they have come down last week. So the 10-year and 30-year pushed down lower midweek. And then you can see they're all pulling back now. So 10-year has come into the daily fair value gap. The 30-year didn't get to it. The upper fair value gap was reached a long time ago on the 5-year, but it was getting close to the lower one. Didn't reach it yet. And ultimately, I would like to see it go to the lower daily fair value gap. As I said, there's a lot of confluence here. We also have the liquidity resting above, so this would be a really nice target. But at the same time, I wouldn't be surprised if fundamentals started pushing the yields up from here. So we'll just have to wait and see if they continue higher or continue to push down lower. For the time being, I'm pretty neutral. I can really see it go either way. Now, if we have a quick look at the majors, you can see that they're all continuing higher except for EU. So for the first time in a while, we see EU lagging behind the rest, while the others are pushing higher and breaking structure to the upside. And if we have a really quick look on EG, so what we can see with EG is that Euro is having a pullback right now, so it's showing a lot of weakness compared to GBP right now. I always keep a close eye on EG to gauge the strength of the Euro, and you can see that EG has come into the weekly fair value gap and having a massive reaction off of it, and it's really been coming down ever since. If it breaks this low right here, that'll be a weekly shift. And if it does shift to the downside, then we may continue to see weakness in the euro and the price pulling back and then continuing down and potentially breaking these lows. And if that happens, then that means we're going to see a weaker euro. And there's no real PD arrays below. It's just the liquidity as well as the order block. So it may just continue to the downside from here, and if it does, then we will see weakness in the euro. And if we start to see weakness in the euro, then EU may start leading the majors for a push to the downside. Okay, now moving on to DXY, starting with the monthly time frame. So DXY has been bearish for this month, so you can see this monthly candle has come down significantly. It's come into discount now. It swept some liquidity, although trend momentum is still to the downside. There is a chance that it could reverse at any moment. As I said, it's coming to discount, and we could see Dixie start to push up from here. But at the same time, it could go a little lower. We do still have the order block on the left over here, and we do still have our OT levels below that. And on some of the lower time frames, there are still some PD arrays below, so it may go and target those as well. But on this time frame, there's really nothing else that you can see other than the order block. Let's move to the weekly time frame. So on the weekly time frame, so last week created a weekly fair value gap above us, and there is still a weekly fair value gap open further to the downside, as well as resting liquidity just below. And then we also have the OT levels just below the sell side liquidity, and the sell side liquidity is also almost exactly where the weekly order block starts as well. So coming down to this level could make a little sense. But a pullback on the weekly fair value back above could also make sense as well. So potentially we could see a pullback back into the weekly fair value gap before continuing to the downside. There's also a 4-hour fair value gap as well, which coincides with the weekly fair value gap. You'll see that when we get onto the weekly time frame. So yeah, it makes a lot of sense for Dixie to have a pullback before continuing to the downside if it wants to continue to the downside. But at the same time, I mean, we are in discount levels. Wouldn't be surprised if we go and sweep this liquidity and then start to see a reaction from there and potentially a shift and continuation to the upside. Now onto the daily time frame. So if we look at what happened on the daily time frame, so you can see we had that aggressive push to the downside, and if we take the fibs from the last impulse leg, the pullback came right into OTE. There was also a daily fair value gap that it filled, and thereafter started to push right back down. So although a pullback does make sense, at this point I wouldn't be surprised if it just continued lower and targeted the sell side liquidity here and the sell side liquidity I mentioned on the weekly time frame, and thereafter potentially after that sweep we may see a reaction and potentially some sort of a, whether it's a shift or a pullback and then continuation. I wouldn't be surprised if this is a scenario that we saw played out. There's also a daily fair value gap. It could also come into that as well. Okay, so now if we go on to the 4-hour time frame, so this is a 4-hour fair value gap I was talking about. So you can see it coincides perfectly with the weekly fair value gap. There's also some buy side liquidity, so some equal highs right at that point as well. So there is some logic for a pullback to this inefficiency before continuing further to the downside, but at the same time the way it's coming down could make more sense to continue down from here. But anyways, let's get back to the price action. So last week we started with further expansion to the downside. In the process we created more fair value gaps. So first one was here, that was created last week. We had one here as well on the daily level, and this was the one that was recently created. So after bottoming out, we started to have a pullback. You can see that we pushed up, came into the 4-hour fair value gap, had a reaction, and thereafter further continuation to the upside. We went through the daily fair value gap, and then the 4-hour fair value gap that was created up here, we just missed it. So missed it by a few pips, and thereafter had a reaction and came right back down. So EU did make it to the OT level. So if we take the fib from the last leg down, it did come up into OT levels before reversing. And then it came down quite aggressively, actually. It took some liquidity here, as you can see. And then after that, came into hourly demand. And then after, had a pullback. So you can see it pulled back into inefficient areas, feeling there was a 4-hour fair value gap right here, as well as a volume imbalance, before further continuing to the downside. And instead of continuing down and breaking the lows, we started to have another pullback right in this area at the extreme. So this is one of those areas where we had news, where we had an aggressive push to the downside. I was expecting continuation to target the lows, but instead it just kind of stopped, had some pullbacks, and then didn't have that continuation I was expecting. So on the 4-hour, a pullback to the fair value gap makes a lot of sense. The fair value gap just above is very likely. So the newly created fair value gap that was created on this impulse to the downside. So this is a very likely target for price to come to before continuing to the downside. But whether it reaches the one up here or not, I'm not so sure. You could just leave it and just target the lower one before continuing to the downside. And we have that sell side liquidity not so far below that we could easily target. But I would like to see that weekly sell side liquidity go. So if it's going to continue to the downside, continue to this level and potentially to the daily fair value gap. And then we see the reaction from there. If it starts to have a massive reaction and starts pushing to the upside, or a pullback and then continuing down thereafter. For now, my bias remains bearish until we see a reversal, a clear reversal come into play. But for now, I'm not seeing it. We are in extremes. I mean, it could start pushing up from here, but what's more likely is for price to just come to the inefficient areas before pushing lower. And then once it comes to this area, so this is the area, this sell side liquidity as well as this daily fair value gap are the key areas I'll be watching for potential reactions. And then we may see a shift or a pullback, and then a second break and continuation to the upside from there. Okay, so if we go to the hourly time frame, what I'm seeing here is, at least for the bearish scenario, so I mentioned about the 4-hour fair value gap that we have, but we also had a 1-hour fair value gap that was created, and we've already mitigated that. So potentially we may see the price just continue down from here. But at the same time, so we may just see price continue down from here, targeting the sell side liquidity and the weekly. At the same time, it may use this high as liquidity to sweep, to come into the 4-hour fair value gap before continuing to the downside, targeting the weekly sell side liquidity. So like I said, at minimum, we should sweep these equal lows, but my preference is to see price come to the weekly sell side liquidity before we start to look for reactions and potential reversals. And then if you look lower, like I said, we have that daily fair value gap, and then we also have the OT levels just below that. So those would be the key areas here, so the daily fair value gap, the sell side liquidity, and then the OT level are the key areas to watch for potential reactions that may trigger reversal. But that's assuming that DXY wants to come down this far. In terms of bullish scenarios, I doubt it'll start pushing up from here, but there is hourly demand just below. So potentially it could tap into that. We may see a shift, and then push up from there. But at the same time, we do have those equal lows over here. It may go for and target those before reversing and coming back down. So for the bullish scenario, potentially we come into here, have a shift, and then start pushing to the upside. The second scenario is we come a little lower, and then have a shift after sweeping these equal lows, pull back, and then continuation to the upside. But honestly, I like the idea of coming to the weekly sell side liquidity before looking for reversals. But that's not to say that it can't happen from here as well. Okay, so moving on to EU, starting with the monthly time frame. So you can see EU is clearly bearish. This right here is just a pullback, and then we're in a pullback of this last leg to the downside. So this pullback has actually come up quite a bit on this monthly candle. So we've tapped into OT levels, so the 618 fib retracement level of the last push to the downside. We've also come well into premium, and we've also come into the monthly order block. So reversal at any point in this area could make a lot of sense. That is assuming that EU stays bearish. I mean, we can assume that it's going to reverse at one point or another somewhere in this area. But it could remain bullish a little longer. There is still some liquidity resting above. It may target that resting liquidity before reversing. And for EU to remain bullish, which for me is a more unlikely scenario for the time being, it really has to break this range high. If it breaks that range high, then it can potentially just continue to the moon. Okay, now moving on to the weekly time frame. So you can see we've had a really nice impulse to the upside. Prices come up and swept a really strong point of liquidity, which I'll explain in further detail when I get into the daily time frame. It's also come into the 618 retracement level of this leg down and well into premium. So last week we started with a nice push to the upside, but then after that it's more or less been consolidating ever since. I mean, the price action was quite choppy. You'll see that when we get on the lower time frame. And just to make a note, we did create a weekly fair value gap as well, just below us, or below the current price, with the close of this candle. And one interesting thing that you'll notice is if you look left, you often see that we have consolidation, impulse to the upside, consolidation, then another impulse to the upside. So there is potential that we see a little consolidation here and then one more impulse to the upside. But at the same time, it wouldn't be surprising if we saw more consolidation in this area, or potentially a reversal anywhere in this area. And if we go to the daily time frame, so let me first talk about what I was meaning about a strong sweep of liquidity. So the reason why I say this is a really strong sweep of liquidity, so we swept this high. The reason why this is a strong area is because this actually did something. So you can see as we were pushing down, we had a pullback, push down further. This swept this high and then continued further to the downside. So this right here is typically a strong high. When we see pullbacks, so as the price is coming down, and if we were to get another significant pullback, we would expect this high to hold before continuing further to the downside. But on this push up, we actually swept that high. So for me, that is a really strong sweep of liquidity. Now, going back to price action, so you can see on Friday we had that really nice push to the upside. Come Monday, I was expecting a bigger pullback, but instead, I believe it was an hourly fair value gap that we came into and then pushed further to the upside. And then on Tuesday, we had continuation to the upside. We came into a daily fair value gap, created the high of the week, and thereafter we had a reaction and then an aggressive push to the downside. So price continued down until Wednesday, and then on Wednesday we created the low of the week, and then we saw price suddenly reverse and then push right back up. It's hard to see on this time frame, but price action was quite choppy most of the week. This was the main reason why it was quite difficult to trade last week, and the reason I didn't bother posting any updates on YouTube is I was thinking price action was going to be chaotic during this consolidation. And to be honest, I mean, just trading what I was seeing during the sessions made more sense rather than predicting what was going to happen during this chaotic price action. And I mentioned during the weekly review that this weekly fair value gap was created below, but if you look just to the left of that, you'll see on the daily level, we did create a daily fair value gap, and we've already tapped into that. And because of that, I'm not sure that EU needs to come down to this weekly fair value gap, especially if we think about the higher time frame and expect at any point in this area, whether it's here or whether it's further above, potentially after sweeping the buy side liquidity, or maybe even sweeping the high once more and potential reversal, may not need to go back to this weekly fair value gap. Okay, so moving on to the 4-hour time frame. So we started the week with a small little pullback at the market open, and thereafter Japan Open pushed the price higher to the upside. We had continuation during the London session, and then right before New York session we had a pullback. There was probably something on the hourly time frame that it came back to mitigate before continuing further to the upside. And then you can see it's quite choppy during these pushes to the upside. But eventually we continued further during the PM session, and then that's where we ended the day. And then on Tuesday, when Asia opened up, continued further to the upside, creating the high of the week, came into this daily fair value gap right here, and then had a reaction off of it, coming back down, and then pull back, mitigating the extreme, and then again coming back down. And then this continued on into New York session, where we had one last pullback to the extreme, and thereafter aggressively pushing to the downside throughout the entire New York session, continuing on into PM session, coming into this 4-hour demand where we had a reaction and then more or less consolidation to end the day. And then on Wednesday, a little more consolidation, but pushing down ever so slightly, but each time pulling back again to the extreme. And then London session came around where we had one last pullback and an aggressive move to the downside, coming into the 4-hour fair value gap that's created on this push to the upside, reacting off of it once again, pushing back up to the extreme prior to New York Open. And then after, during New York session, aggressively pushing to the downside. Had continuation during PM session, creating the low of the week. And this low of the week did a lot of things. It came into a daily demand, or came into a lot of PD arrays, sorry. Came into daily demand, came into 4-hour demand, it came into a 4-hour fair value gap, and it also came into this small little hourly fair value gap as well. So that's where it reacted off of and aggressively pushed back up to the upside. I would say late in or during the PM session, during the PM session, and then we had continuation thereafter to end the day. And then on Thursday, so Asia session started with some pullback and then continuation to the upside. London session had that continuation as well. And then you can see this was really messy price action. I believe we had news. I think it was PMI data for Europe, where we had a sweep of or manipulation of the lows, and thereafter a really aggressive move to the upside. And at this point I thought it was just going to continue to the upside, but that didn't happen. Instead it stopped, and then it did a lot of choppy price action, coming lower and lower, and at that point I knew it was going to just come down lower. And sure enough, it did come right back down, and you can see it came back into this 4-hour fair value gap that was created on this push up before reacting and then coming right back up. And then you can see just consolidation thereafter to end the day. And then the next day during Asia session, we had a pullback, didn't come into the fair value gap, probably mitigated something on this candle, and thereafter pushing right back to the upside. London session came around, and then we pulled back into a hourly fair value gap. Actually, we had continuation and then a pullback to the hourly fair value gap. And then right before New York session, we started pushing to the upside. And then there was news around this time that triggered an aggressive move to the upside. We broke the previous highs, and then we came into this hourly supply. So it came into this hourly supply, and you can see we're reacting off this hourly supply right now. So for the time being, well, that's where we ended the week. For the time being, I'm still bullish. We've created a 4-hour fair value gap on this push up. It's the only PD array that we have that's unmitigated. So if it remains bullish, I'm thinking that probably early next week, maybe when the market opens, we come back down, mitigate or fill the 4-hour fair value gap, and then reverse and then continue further to the upside. So that's what I'm thinking for bullish scenarios. But at the same time, I also see a bearish scenario, and this is a bearish scenario that if it was lower time frames, I would consider trading. So you can see we created a high, created a shift, came down lower to show intent that it wants to go down, then coming back, created internal liquidity, and then coming back up for one more drive to go to the extreme, and thereafter a reaction. So I'm seeing this as potentially we may get a second shift here, and then if we get a pullback thereafter, I may look for sells. So I'm looking at a potential bearish scenario where if we get a second shift and then a pullback, I may look for sells to bring the price right back down. We've come up quite high, so we come up into really significant levels. So we do have a weekly breaker block that we're in. We've come into the the 618 retracement level, just barely exceeded it, so into OTE. So a reversal in this area could make sense. And the way the price is moving, it would have been better if we broke a low, like came down and broke this low before the pullback. But potentially at this level, we can consider this a shift, and this is just a reaction off a PD array to bring the price back up to the extreme before reversing and coming back down. So I'm seeing it both ways. I do see potential continuation to the upside, but I do see the possibility if this comes back down and shows more weakness, then I may look for a pullback to take the price down. Okay, now if we go to the hourly time frame, so you'll see a little more clearly what I was talking about a potential bearish scenario here. So you can see on this low that we created on the hourly time frame, that could be an area where we shift from, where price comes down below, shifts, and then pulls back into inefficient pricing, so fair value gap up here. Thereafter, a lower time frame shift, like on the 15-minute, to reverse and come right back down. So that's one of the scenarios that I'll be looking for come Monday. So just to summarize, on the higher time frames, we're really high in premium now. We've come into OTE, we come into all kinds of nice PD arrays that we're reacting off of. So assuming bearish structural holds or reversal at any point can make a lot of sense. At the same time, there are still levels above that can also make sense for you to reach for, specifically the sell side, the buy side liquidity up here. But to be completely honest, at this point, I can see EU going either way. So short term, here's what I'm looking for. So bearish scenario number 1 is this. Bearish scenario number 2 is mitigating the fair value gap, coming back into the extreme, and then sweeping the highs, coming back down, maybe a pullback, and then look for sells thereafter. For bullish scenarios, what I'll be looking for is, once again, mitigating the 4-hour value gap and then coming back up and breaking the highs. And this right here has to be a convincing break and a close, not just a sweep and coming back down, coming up, closing above, and thereafter potentially a pullback into a breaker block and potentially some inefficient pricing on the left before reversing and continuing further to the upside. And for this scenario, of course, like I said, the buy side liquidity above will be what I'll be targeting. For the bearish scenarios, I want to see a break of this low right here. If we get a break of this low right here, then there is potential for sells to go all the way back to the bottom eventually. Anyways, that's it for this video. I hope you guys found some value in today's video, and if you did, a like and a subscribe would be appreciated. Enjoy the rest of the weekend, and I'll see you for the next one. Peace.
Black Swan.